afternoon, everyone. Thank you so much for joining us again for another webinar session this month. Before I kick off and tell you a little bit of details around today's session, first of all, I just wanted to wish all the fabulous women out there a happy International Women's Day. It's incredible that what women do, whether it's juggling home life, families, the kids, careers, jobs, etc. So just a huge shout out to all of you, and no doubt you're probably celebrating in style in your workplaces today. And again, we really appreciate everyone sharing your hour with us today to talk about Easter insights and also the 2023 outlook. So I'm going to share some little housekeeping settings because, again, we have some new guests in the audience, which is fantastic to see. You'll notice that we have settings for the sound located in the top right-hand corner of your screen. And if you have any issues with the video quality, just refresh your browser and that should sort it out for you. You'll also notice too that we have a chat box to the right-hand side. So we really encourage you to share any comments. Please say hello. We love to hear from you and see where you're from. There will be a few polls throughout. So if you feel comfortable, feel free to answer them. And it's also a really great opportunity for you to ask questions. So we do have a lot of our clients join us on these sessions. So again, share a question if you've got one, or if you're new to the table, of course, please don't be shy and share any comments, feedback or questions, and we'll get through to them as quickly as possible. And as always, we'll share today's presentation. So we always get asked that. So stay tuned to the end and we'll share that with you as well. So for those who don't know who Kepler Analytics is, we're a unique people counting technology. The problem that we're trying to help you solve is understand your customer's path to purchase in store. So traditionally, most retailers will have your sales targets, your IPS, average dollar metrics, but we provide you a full suite of measures. So what's your sales conversion rate, your fitting room conversion, and all of those other additional data points throughout your store. So and anyone who's using Kepler at the moment, we've found that statistically, we've noticed an increase in sales or improved customer satisfaction or a decrease in operating costs in over 87% of your stores within the first year, which is pretty amazing. So my name is Kylie Smart. For those who I haven't met just yet, I'm the head of customer success at Kepler. With me today, I've got the fabulous Tony DeFazio, who looks wonderful sitting in front of that bookcase. It makes you look very intelligent, and very intelligent you are. We can't wait to hear from you today to talk about the insights for Easter, as well as what is the 2023 outlook looks like. So it's certainly a hot topic at the moment with what is going to happen this year, given recent, inflation, interest rates going up, etc. So we are really looking forward to hearing from you today, Tony.
Thank you, Kylie. Thanks for the intro. Happy International Women's Day, everybody. As one of 3 men in an extended family that includes 12 women, I can only say I'm in awe of everything that women do. So fantastic to celebrate today. There's a few people in the room that don't know me. Those that do, hello, nice to see you again. For those that don't, please understand that I'm an old retailer, so I don't do formality very well. If you need to ask a question, please type it into the chat window. I do have it open on the right-hand side of my screen here, and I will be answering questions as we go. So, look, let's get stuck in with a forecast for Easter, the outlook for Easter and 2023, and let's get stuck in. So the key highlights, we've got some headwinds. We all know this. The retail spend in Australia is showing declines, more so than some other regions. We expect a bit of a turbulent year ahead. I think that's not new news to anybody. But there's some underpinnings here. There are some opportunities. Shopfront conversion, we spoke about this in the last webinar during January. Shopfront conversion is up pretty significantly. And it's the shopfront conversion and the resultant increase in inside traffic that's underpinning sales so far this year. February had a pretty steep drop, which means that retailers need to be more savvy than ever at driving their storefronts or driving that activation to bring people into their stores. We need to do that differently, and we're going to talk about a few techniques to do that a little bit later. As far as Easter goes, we expect April sales to be flat. We expect Easter to be a little bit weaker, and we'll go through why. But we expect the tail end of April to actually pick up because of school holiday timings. And again, We have some concerns. The ATV trends are already declining versus last year. Sales conversion is now starting to trend down. We're going to spend a bit of time on sales conversion. It's the holy grail metric. So we'll spend a little bit of time on that. The key message here is we need to be agile and be willing to be bold with our solutions that we bring into stores. There is a very real chance that the risk for 23 can be mitigated significantly. There's even a small chance you can grow sales if you do things differently to the way we've done them before, and you need to be a little bit bold in the way we do this. But let's get stuck in and let's move through. So here's the global wrap, the Australian wrap. Let's go through this a little bit. So at the top, we've got some external sources in the top left-hand corner. We've got some ABS stuff for Australia. We've got some trading economics data for international markets. You can see that the USA has actually performed year on year pretty strongly, 6.4. Australia was 7.5 up. UK went back just a touch. China a little bit inconsistent in the data. But you can see here Kepler clients, and this speaks to Kylie's point. We have noticed for a long time there is a Kepler effect. Clients with Kepler do tend to outperform clients without Kepler. Our Kepler clients grew by 10% year on year in January versus the 7.5% that the ABS put out. February was a pretty quick comeback to earth. So February was a minus 1.8. So those numbers pretty hot off the press at the end of last week. Underpinning this, we've got the household savings rate. We've spoken about this, or the economists have spoken about this. I'm not an economist. I don't wish to be an economist. But it's important to understand the data that those wise minds put out. The savings rate is now below where it was in 2019. We're at 4.5%. So discretionary spend, and we're going to see this moving forward as well. The pattern of spend and what industry sectors that spend is going into has also changed quite a bit. The USD forecasts are pretty tight. I mean, it'll go up against the yuan, but we don't expect the dollar to be very strong. We don't expect the US dollar to be very strong against euro. And certainly I saw today, although having said that, I did see today that the Federal Reserve overnight has said that they're going to probably raise rates higher than expected. So, there's pretty fluid economic situation out there. So let's see what happens on that front. Just an interesting call out on the right-hand side, on the right-hand column, is that luxury brands continue to push ahead. So if you are in that luxury space, or you do have the ability to occupy or push goods into that luxury space, that is experiencing some phenomenal growth. Again, I don't know that that's a lot of new news, but it does shape up some of the discussions that we'll be having moving forward. I just want to move into for some reason my chat has disappeared. That's okay. There we go. Click that back. Just make sure I don't miss any questions. The pattern of trade. So online had a wonderful little boost. You can see on the right-hand side. So COVID got it from around about 8% up to around about 15.4 during the Victorian New South Wales lockdown 3, Victorian lockdown 4,751. We got up to some pretty high online share of trade, but that has settled back quite sharply early into 23 and has settled. ARA is predicting it to go back up. I'm not sure. This seems pretty stable from here. If anything, it's on a downward trajectory. Let's see how that goes. But certainly stores, non-food stores. So we've stripped out grocery, we've stripped out food and cafe. This is retail stores have gone 18.2% up in the last 12 months. So that's quite strong. So we do see that online stores have picked up. Online stores have dropped away quite a little bit, and retail stores have picked up their share pretty significantly over the last 12 months. Will it retain at 18.2? I certainly see the share stabilising, if not increasing a little bit further for retail stores. Some interesting responses to the poll after February. So if you haven't had a chance to put your response in there, please do flick over to the poll. That's interesting. So after February, we're seeing there's one retailer that's seeing an increase in their expectations for the balance of the year. That's fantastic. genuinely do think, and we will talk about strategies, I genuinely do think there is upside if we're smart about this, if we're savvy about this, and if we're bold. I think the key word is bold. And we're going to talk a lot about transactive capacity. I'll go back on this. A few of you have heard me talk about this. Transactive capacity doesn't always necessarily mean staff. It doesn't necessarily mean how am I able to process a transaction at the register. It's everything. It's the floor to ceiling. It's the wall to wall metric. It's how well does my store set up to engage transactions. So it's everything from once they walk in the door, to the tickets, to the music, to the ambience, to the navigation, to the service levels, if that's what you do, access to fitting rooms, if that's what you do, or proofing points, if you've got proofing points in your store. I know we've got a couple of clients who have some really fantastic demonstration stations that are in our webinar today. Anything that aligns from customer that walks in to encourage that transaction, both self and store supported transaction. That's what I mean by transactive capacity. All right, spinning on to the next one. Let's get stuck into some metrics now, some Kepler metrics. So shopfront conversion remains the key metric. So shopfront conversion, actual 23 so far is up 6.1%. So we haven't seen this again. I said this in the last webinar. We haven't seen shopfront conversion go up since the back end of 2019. So seeing, in fact, probably early 2019. So seeing a really, really solid rise like this is pretty extraordinary. And it's shopfront conversion that is driving an inside traffic boost year on year of 7%. So we forecast, our rolling forecast had us at about 3.8% up on inside traffic. We're actually up 7%. So that's extraordinary. And that's driving our sales. So sales up 4.3, we're a little bit behind. And the reason for that gap is this little red arrow down here. Now, I had a client say to me the other day, they were a little bit concerned, a little bit confused. They said, my inside traffic is going up, my sales conversion is going down. How can that be? Now, again, I'm going to flip back to that concept of transactive capacity. If we've got more inside traffic, then we need to be more efficient, more capable of dealing with that inside traffic. And that's where that transactive capacity comes in. This is a gift. At the tail end of our last webinar, I put a quote in from one of our clients from a long, long time ago. Any entry into store is a gift. A 7% increase in inside traffic is remarkable. That your stores are 7% busier is nothing short of outstanding. What I do want to draw attention to, though, is that sales conversion has only risen by 0.9. So we are taking up some of the slack, but not all of the slack. And there is an ability to drive even higher levels here. We didn't have shopfront or sales conversion settling back quite so rapidly. We're pretty much on the money with ATV. We see ATV being a little bit more robust than what we'd originally predicted. But our average visitor value, that is the dollars spent per everyone that is coming inside the store, is actually declining because we're just not able to maximize this inside traffic boost that we are picking up. Let's talk about categories. So this is some of the categories that we're seeing. This is ABS data. So ABS, we'll talk about the Kepler stuff a little bit further on when we get a bit more specific to the Easter campaign as well. But effectively the theme here is that customers are seeking to replenish their emotional and their fashion stocks. So if we break down this period here between the year that decency forgot, 2020, and the early parts or the late parts of 21, you can see that household goods soared as everyone repositioned their lives to a work from home structure and so on. Other retailing went up in support, and cafes and restaurants, well, you couldn't leave the house. So it's very hard to spend money in a cafe if you're not allowed to go to one. So we saw those declines. And then under investment in clothing, footwear, personal accessories, again, simply I don't need to go anywhere. So perhaps I only need to update the top half of my wardrobe and not the bottom half. So no one can see my feet anyway when I'm on a webcam. So we saw some declines in some of these spaces. These categories, these underinvested categories, are now seeing the lion's share of the growth. Household goods has come back. So since in the last 12 months, household goods has lost 2.4, cafes have picked up 2.2, other retailing has lost a little bit, clothing, footwear, and personal accessories up 1. So we're seeing that realignment as customers seek, like I said, like we put the note down here, customers are seeking to replenish their emotional stocks and their fashion stocks, which lends itself. We're going to talk a bit about the emotional drivers of Easter and some of the overseas trends that have been talked about towards Easter. But I think there's value in understanding the purchase drivers around this, the purchase drivers around fashion, and the purchase drivers around this emotional state. And if our sales messages or our brand messages or our campaigns, our executions can align towards these pieces, perhaps we can capitalize. And if we're in that household goods space, perhaps we can slow some of this decline, mitigate some of that risk by positioning our goods as more emotional, more fashion, more into this need to keep my soul replenished, need to keep my social abilities replenished, rather than allowing the cafes and the restaurants and the takeaway to continue this wonderful growth that they're having. But geez, it'd be nice to have it back into our client base as well. Outlet centres. Outlet centres got hit very, very hard during the pandemic, and even coming out of the pandemic. Outside traffic was, and passing traffic within those centres was hit really quite hard as people stepped into CBDs and strips and open air centres quite an awful lot more. Outlet centres have been a bit of a darling over the last period, certainly since the start of the year. Alongside CBDs, CBDs have had a really fantastic growth in their sales trend. Obviously, more people returning to work and so on underpins that. But the outlet centres have actually really been quite strong. And they're also growing further than a lot of other outlet types or a lot of other chain types, certainly more recently through the tail end of February. And this is week commencing. So this goes up until the 27th of February, the week before last. So if this trajectory continues, we're certainly on a winner. This is what is happening in outlet centres by week, year to date for versus last year. So you can see that passes by, where normally this was, I mean, pre-pandemic, we're at 30, 40% down and really, really stubborn. But there's some really, really solid growth versus last year. And the passerby traffic, the outside traffic, never entered decline. And you'll see on some of our later graphs that inside traffic did drop, or outside traffic did drop below, or did drop into negative territory for a few weeks through this really weak period. Outlet centres more than held their own. It's interesting though, because what we're seeing is that the ATVs are declining, and they're declining more rapidly than the rest of the market. The transaction volumes are actually really quite solid. So there's a bargain conscious client out there. There's a bargain conscious shopper that is needing to push through into these outlet centres. Again, we talk about transactive capacity. So ensuring that our stock, our transactive capacity and offers are aligned to this. We're calling it a rejuvenated retail channel because it has come away with a bang. It's great to see it doing this. It really is, because they were in a lot of trouble for a long time in terms of just how much we could extract out of a declining traffic pool. But to see that traffic come back, to see those transaction volumes come up, we need to make sure that we are able to push those transactions through, that we are supporting that with stock, and that the offers are different, because that's what the customers are expecting. The customers are expecting different offers in their outlet stores. For some of you, I'm sure that will be a question mark, where people will be sitting there saying, but surely we have our outlet centres as different offers. Not every retailer does. We think that there is significant strength in doing this for these channels moving forward. All right, now let's get stuck into a different layer of the metrics. So this is a wonderful graph, lots of squiggly lines, very good color scheme as well. I was really impressed with this one. But what I want to do is I want to break this down. So this is all of the metrics as we've moved through the course of the year. I've broken this down into 3 stages, and I want to really focus on this darker violet line, the inside traffic. And then I also want to break it down to the sales conversion line, this light green that comes through here. And these are the 2 comparisons. You can see that inside traffic and sales total are really, really closely aligned through this first period, from about the start of Jan right up until very early February. You can see they're very closely aligned and they're trending down. Sales conversion is similarly trending down. It held its own for a couple of weeks, and then it's come down quite a bit since then. Now, this is Kepler data. These are Kepler clients across the 1,850 odd stores across the Kepler Retail Index. And so up until early Feb, sales conversion, inside traffic, and sales dollars all declined. We then had a period of stabilization for a couple of weeks. Well, certainly inside traffic sort of stabilized. It wasn't on the ski slope that it was on. It's not the same at the end as it was at the beginning, but it's certainly not that free-for-all decline that we had experienced in the prior 4 weeks. Sales conversion continued to decline. We then had a little bit of a kicker in sales conversion, but sales conversion has continued to come back down. Inside traffic is rebounding, and so now inside traffic has ended at 8% up, and we saw that inside traffic since the start of this year is about a little bit over 6% up. So this is the question that I want to ask. These are the key questions that I'll put out to the group. If you want to answer it in the chat, I'd be very intrigued to see any feedback in the chat channel. Or certainly it's a question that if I still had my stores, I'd be asking my stores. The questions are this: is inside traffic increasing because we have more browsers or larger group sizes? Or is it that we're missing sales conversion opportunities and therefore missing our sales opportunity? Should this sales line actually be a little bit higher than what it was simply because this sales conversion is continuing to trend down? Now, remember at the start, we said sales conversion was actually reasonably strong. If you break this chart up and you break it into the January and the February period, there is a very, very different result in February moving forward than there was in January. January still had very, very strong sales conversion. February does not. Inside traffic is rebounding at a time when we've lost that ability. I think we've lost that ability to focus on our transactive capacity. I don't believe in browsers. I don't think that there's still enough retail traffic out there for there to be browsers. I also don't subscribe to the theory, certainly not in an Australian retail market where retailers are very capable of doing what they're doing. Their brand alignment, their store executions are very, very strong. No one walks into most Australian retail and says, oh, but you sell bed sheets, I was looking for a mobile phone. It doesn't quite happen that way. In some other markets where there's a lot more retail concepts, there's a lot more fluidity in brands, certainly from market to market. That's probably more likely. Certainly I've experienced that. You walk into one store thinking it's one thing and it's absolutely not that. I don't believe browsers exist. I certainly don't believe that if someone walks into a store and sees something that catches their eye, is priced accordingly to their expectation and is available, I don't believe that person looks at it and goes, no, I'm not going to buy it. I think if you meet those 3 triggers, if you meet those 3 criteria, they will. So the idea of browsers to me is not a good one. It doesn't sit comfortably with me. Larger group sizes, no evidence of larger group sizes, no evidence that they're shrinking either. But again, if someone is walking into the store and they see something they like and so on, will they purchase it? I think there is that piece again in missing sales conversion, certainly from middle Feb, around about that week starting the 13th and onwards, that perhaps our transactive capacity alignment, whether it's stock, whether it's ticketing, whether it's execution, whether it's staff, whether it's, are we open at the right hours, or are we executing in the right way? I think these are questions we will have to face, and these are the 2 key questions for retailers. Moving forward, no questions. If anyone's got any questions on that one, I'd love to hear it. No questions. I'm either babbling, you all think that I'm random, or maybe I'm hitting a note. I don't know. I'm gonna go on the last one, and let's keep rolling from there. So let's look to the Easter expectations. So Easter expectations. This is 21, 22, and 20, and our 23 forecasts in the blue. We see Easter, like we said earlier, we see Easter being pretty flat across the entirety of the month, but we do see the month being a month of 2 halves. We see that the Easter lead up is probably going to be a little bit softer than what it has been in prior years. We see that there's probably going to be a little bit above 21 through some of the key days, but certainly behind where we were in 22. But we see that situation reversing through the back end of the year, we see, or the back end of the month, apologies, we certainly see that sales will be stronger as the school holidays kick in, as we move into that Anzac Day week. So this is just our phasing, our expectations as to what we see. But again, there's that transactive capacity alignment. We've got to make sure that our labour targets, our labour spread, whatever it is that we do that inspires purchase. I mean, you don't want to take your eye off ticketing or merchandising or ambience at any point of the year. But if there's a point where you say it needs to be bang on track, and I'm going to roll out the special golden ticket at one stage of the year or one stage of the month, certainly the tail end of the month would be the time to roll that one out. So that's our expectation for April. Easter, like we said, a little bit softer than 22, probably a little bit above 21. But we do expect to be able to claw back any 22 declines through the tail end of the month. So this is just some stuff that we picked up, and I think we discussed this in our last Easter webinar, so about 12 months ago, but it's been 12 months. I do quite like this research. This was done by the NRF in the States, and it was quite a, they didn't redo it this year, which I was a bit disappointed about, but it was quite an extensive research piece. I do suggest we do have the link up here, so when you get that handout, if you're doing a research, I thought it was a really good research piece, presented very well also, so all credit to the NRF. They were predicting this, so this was their average spend per capita that they had predicted up until 22 Easter, and they had seen a peak through the pandemic, and then they expected it to come back a little bit after the pandemic had sort of reared its worst through 22. They expected it to come back. We're probably going to expect this to come back to about a 2019 level this year, there or thereabouts, with some of the expectations. But I wanted to look at, in particular, now this is an American market, but I think sometimes psychographically we're not all that different to our American cousins. What is the shift? What are the celebration plans? What are the points of difference that they wanted to do? And the thing that, and it's not surprising, none of it is surprising, but all of the behaviours are all around doing things socially, replenishing our emotional stocks and getting away from our solo activities. And again, that theme of keeping it social, keeping it emotionally replenishing, keeping on that replenishing of my soul, keeping myself looking good. Shopping is still a thing at Easter for the Americans. Keeping that behavior, that emotional replenishment up is certainly a key piece. This was just some interesting stuff, again, that I thought that they had done. It certainly seems to be that Easter is a young person's game, especially if you're me. I'm certainly not in that under 44 category anymore, but Easter is definitely a young person's game, at least in the States. The not planning any purchases is the above 44s, so anyone 45 to 65 plus. Nope, no one's getting eggs off us. We don't buy candy as gifts. So tough luck to my kids. No Easter egg hunt this year. But certainly the gifts, the candy, the food is all purchased by a younger demographic. So the reason I wanted to put this in again is thinking about how we align our campaigns, our executions, our offers, our in-store engagement pieces, thinking about how all of that happens throughout our stores, and what are those micro things, what are those bolder things that we can do to align the key pieces. Again, some demographic differences between men and women. Interestingly, men will shop more clothing during the Easter period than women, which I thought was interesting. Women will pick up more decorations than men. That one I don't find surprising. I'm quite happy with a wall of books and a picture of Thierry Henry behind me, but that's a different story. I wanted to cast a net a little bit further as well and look into April, May, and June. So casting an eye towards Mother's Day also. Location profiles. This is 22 indexed. So last year's inside traffic or last year's sales or last year's average visitor value indexed towards March 22. So if March was 100, then June is 128. It really is that that relational. It's a pretty straight line. But again, last year, outlets and CBD had an absolute blinder. In fact, outlets did quite well April and June, pretty solid through May as well, but it was very much around outlets and CBD, and to a degree metro centres. So we differentiate our centres into metro and metro super. So metro super you would throw in, this is pretty logical, you would throw in your Chermsides, your Burragoons, your Bondis, your Chadstones, anyone in that sort of top 20 in the big guns list is within your metro supers, and then metros is everyone else. Not to say that they're not capable of amazing things, they certainly are, but we've just differentiated because those super centres do have a sensation of gravity on their own. But you could see that inside traffic was starting to return at this point last year. Now we're seeing inside traffic stronger this year than last year. So if these patinations hold, this is going to create some interesting scenarios for in-store experiences if we have an aligned transactive capacity. If it's harder to negotiate, if it's harder to find the size that I need or the color that I want or the flavor that I want in the particular store, and I have to wait for that replenishment, or I just have to wait in general, or I can't find it at all, what then will happen if our traffic's already higher and our traffic is bunching up, particularly through these periods in these location types? The second one is around our sales total. Again, there is some pretty strong sales values that bunch up through these periods. CBDs did very, very well. I think everyone had done very, very well through April, May and June, with the exception of homemaker locations in April. Perhaps not a great Mother's Day gifting or an Easter gifting location or an Easter shopping location. Maybe under 44s don't like to go to homemaker centres, I'm not sure, for Mother's Day. And then average visitor value, again, really quite soft. That bargain conscious shopper has always been prominent at outlets. This year we're expecting that to be even further. So if we're expecting a big influx of traffic and some challenged ATVs this year, then the AVV of outlets, we really need to make sure that our sales conversion is right to counterbalance any of that AVV decline. There are two key questions that we need to answer ourselves. We're going to start to get into some answers and how we can answer those questions and the strategies for mitigating some of this risk shortly. But there are two key questions we need to ask to optimize our stores. The first one is, when does share of traffic and share of sales misalign? If Monday is 10% of my inside traffic and 8% of my sales, why? Is it because Monday shoppers don't like to shop? Is it because Monday shoppers don't spend as much? Have my Monday offers varied? Or does my Monday change its behavior? And it might not just be by day of week. Again, we need to be bold, so we might even be looking even more granular than day of week so far. The next question is, when do AVV and ATV misalign in ways we don't want them to? Now, again, those that know me know I choose my words particularly carefully. An AVV and an ATV misalignment is not always a bad thing. I may have ATV go down and AVV go up because I'm pushing volume stock and people are buying numerous items of volume stock. Something that used to sell at $40, I'm now selling for $10, but people are stocking up and buying 6 instead of buying 1. My ATV has gone down, but my ATV has gone up, and I've got a flood of customers. My AVV is going up, and that's what my volume drivers are experiencing. I've pushed my ATV up, and in a different circumstance, I might have raised my price. So my ATV is going up, but I'm getting less people purchasing because they're resistant to the price. And so my AVV is going down because simply I'm losing sales conversion. I may choose for my ATV to go down in outlets, but I want my AVV to go up because I want people to purchase whatever they can throughout the stores. They may purchase at a lower value, but I'm continuing to move stock. And so as long as it doesn't misalign in ways we don't want them to, these two can do a nice little dance amongst themselves, and you've just got to align those expectations. If you need support with that, and you're a Kepler client, if you need support with it and you're not a Kepler client, firstly, come on board. No, I'm kidding. If anyone needs support with that, please do reach out to us. We're more than happy to answer and work with you to assist you with any of these questions at any point. I want to do the same analysis. I'm not going to spend a bunch of time going through all of these wonderful numbers. But this, and you'll get the slide deck at the end, but this breaks it down by the different categories across the board. And so you can see athleisure is just going gangbusters. So I think there's a couple of people in the room from the athleisure category. Absolutely fantastic. General merchandise and electronics, a little bit softer. AVV has been really quite solid for these guys. But you can see that kind of spread. Watch and jewelry, May, Mother's Day, lots of blokes getting themselves out of trouble. Fantastic. Good on you, fellas. But you can see all of those behaviors that come through. But again, remember, this aligns to that same transactive capacity. It aligns to those same questions. When does inside traffic and sales share, when do they start to deviate? Do they start to deviate? If they do, why? What can I do to fix it, if anything? And then when do my ATV and AVV misalign in a way that I don't want them to? All right, so spinning on to the next one. So there are 3 challenges that we've isolated. So 3 things that we've worked through this one. Market data is reactive. How do I look forward to the opportunity that is now? Because the reality is our customer patterns are changing. We've spoken about, we've spoken in different sessions, and we've done a couple of mini radars on this as well in the past. And again, if anyone would like more detail, please do reach out. But we've spoken about how customers have shifted away from late night trades and away from weekends, and particularly late afternoons and weekends and Thursday nights and Friday nights. And they've moved to Monday, Tuesday, Wednesday, particularly in the morning. How do I react to the opportunity that is now? Because we've got to be more granular. We've got to be more aware of what is happening at any particular point, and then be able to capitalize on that. Second question is, how do I know when my transactive capacity is below par? Now, you may or may not like the concept of transactive capacity, but how do I know when I've got misalignment in numbers that are really, really important to me? How do I know when I've got a bunch of people in store and I'm just not converting them, or I'm just not driving ATV? Because we need to react and capitalize on each of those opportunities. And then finally, if my inside traffic is up and shop front conversion is up, but I'm not experiencing that 6 or 7% increase in those metrics, and I know they are the key metrics that I need to focus on for the balance of the year, how can I capitalize on those increased shop front conversion trends? How do I make sure that I'm at the leading edge of those shop front conversion trends? So I'm going to get into some answers now. Now, the first answer is this one. So most of you would have seen the CET screen. We have now released the advanced CET. So this is for a store that is on track. And so I'm just going to pause it for a second there. You can see that the store is on track, which means that the store has actually hit its sales target. So I know you can't see my mouse, but you can see the big green on track in the top of the screen. And if you look to the bottom left-hand edge of the 2 donuts in the middle, you will see that total sales have exceeded the sales target for the day. But as we scroll down, I'm going to pause it again. We can break down zones throughout the store. Now, if you physically have zones within your store, i.e. you've got your menswear delineated by a sensor and your women's wear delineated by a sensor and kids' shoes and so on and so forth, we can break that down by zones. Or we can actually break it down just using your existing POS feed. As long as we have that at a department or sub-department level, we can actually break down those zones within store and create some monetized opportunities. So this stems from, again, another one of my little personal beliefs. The cardinal sin of retail is to leave money on the table. So this, even though this store has hit target, this store, and this is based on live data, it is just anonymized. It is run through our demo dashboard. It is anonymized data, but it is live. This store, even though they had hit target for the day, had opportunities in excess of around $1,300, and their sales target for the day was a little bit over, was just around about $7,000. So they had about a 20% kicker. Let's call it 15% between friends. It's a little bit more than that, but they had a 15% kicker. They left 15% of their money on the table. And the way for them to do that is to increase their average visitor value, or their ATV, across a couple of these departments. And if they then know what to do, if a store manager can then look at this still 2 or 3 times a day, as they should best use their CET. But if a store manager can look at this one and say, if I focus on women's wear, and I just focus on driving my ATV and have a look at that zone, and they may notice that perhaps some of their premium items have run out of stock, and they may need to face up or increase the color ranges or the size ranges of that line item, or those popular stock items. If we can direct the behavior to that one opportunity metric that is prioritized by dollar value, and it is quantified, achievable, and store specific, perhaps we can start to create not just risk mitigation, but perhaps we can actually start to turn that into an increase and a performance well above target. If you have any questions around that product, again, please do let us know. The next one is an existing tool for retailers. This is actually, again, live data, and I've just gone through a couple of client dashboards to pick this one up. But remember that we discussed that the customer pattern had shifted away from the late night trades and away from weekends and had shifted earlier. So I just want to focus on just one example here, just in a Monday morning. This is their share of traffic. This is their hourly dashboard. They can see that their inside traffic 16, 19, 22, 18, and then after lunch it drops. So the Monday traffic is very much focused towards the early part of the day. Now, I've done this over a 6-week window. So this is actually a 6-week average of data for one particular store that this client has. When the store is busy, conversion rate is pretty mediocre. As the store quietens, then the sales conversion rate actually improves. So I can deal with 13 customers and convert at 57%. I can convert at 45. I can convert at 52. But once I've got 19 customers, I'm only converting at 29. So there's about 20% sales conversion that is missing here. So there is 4 customers, 5 customers that is missing from each hour across each of these hours, every single week, every single Monday. So you've got 16 customers that aren't transacting at an ATV of, let's call it $80. That works out to be about $1,100 each Monday. That's about 55 grand a year. Now, this happens quite a lot. The question that I will pose is, it's around the busiest times of day. It's around shift changes. You can quite clearly see when shifts change across these dashboards, and you can quite clearly see when coverage of breaks is required. Doesn't mean that staff aren't allowed to have breaks. Certainly, you need to maintain legal compliance, if not human decency, and allow your staff to be nourished and fed and watered, etc. It's just around how do we cover, how do we adjust, how do we slide our rosters, where do we put our people? As we said last time, it's not necessarily about more staff. It's just about better placed staff throughout the work, throughout the day, throughout the week. And looking at a long-term average, you can actually start to work out when stores perform at their best and when they don't. Again, please reach out for further support. If you've got the hourly dashboard and you just need someone to go through this, I call it a white spotting process. I'm just looking for these light color blocks. If you need anything, please reach out to your client partner. We're certainly here to assist you on that basis. The next one I want to talk about really quickly is around that shopfront conversion piece. Apologies for that. I want to talk about that shopfront conversion piece and how do we make sure we do that. So I've just drawn up an imaginary store here and put some boundaries around it. This is a store that has traditionally had their shop floor covered by a sensor. They've had their fitting rooms covered by a sensor. We actually have a couple of clients, so this is readily available. We have a few clients, in fact, I think it's 3 or 4 now, who have placed a sensor somewhere towards the front of their store. They don't do it, some do it across all of their stores. Not everyone does it across all of their stores. It depends on you and how you want to execute it. But that first sensor is designed to measure 1 meter out front of their windows. Now you can customize that boundary, but it's designed to capture people who pause within this zone for 30 seconds or more and then transition in. Now, the reason I think this is really, really important is we know that shopfront conversion is going to be that key metric. It's already driving the increase in our sales. We suspect that shopfront conversion is actually going to be pretty strong throughout the year as people are seeking their offers and their bargains. If we do a window treatment, if we do a storefront execution, if we have storefront offers that we're relying on to bring traffic in, are we actually using that? Are we using it to make sure, I know we've got shopfront conversion, which is our total pool of outside traffic, but how do these windows work? How do these treatments work? If you've got a store that you think, I don't know that this store is in the right location. Is it the location, or is it the execution, or is it the fact that it's on a corner? Is it the fact that it's got a narrower door than some other locations? Because getting that portfolio right, and we've spoken about the portfolio stuff in different webinars. Again, if anyone wants help with portfolios, we are here to assist you. But placing that sensor across that storefront to just work out how many people engage across that storefront and then transition in, I think that's paramount for a lot of retailers across the course of this year who need to understand how shopfront conversion works. Josh Sudweek's hourly dashboard is so good. Mate, the hourly dashboard is the source of all truth. It is my favorite of all the dashboards. I reckon 80% of all analytical queries can be answered within the hourly dashboard at a store-by-store or channel-by-channel level. It is a fantastically powerful dashboard. All right. Challenges are ahead, but they definitely can be balanced and they definitely can be mitigated. I think that the mitigation of risk is a mandatory. We know that we don't want to go backwards. No one ever wants to go backwards. It's doable, and it's doable if we take advantage of that shopfront conversion. It's doable if we manage our outlets and manage our transactive capacity in the way that traffic moves across these different channels. And it's doable if we manage the behaviors and the alignment of resources to the when it happens in the new paradigm. I think that rostering piece and that alignment piece and that scheduling piece, it even boils down to, I've done some work with different clients around calls that are scheduled. The store manager calls in this particular state happen on a Thursday morning at 10 a.m. Well, that happened to be the busiest hour for a few of their flagship stores. So let's pick a different time of day. Even reviewing those activities. When do we do stock drops? Who's involved in stock drops? All of those things. I think all of that comes into play. Average transaction value and sales conversion is going to be the new battleground. For the last 3 years, shopfront conversion has been the battleground. Thankfully, for that metric, we can now say that we've got opportunities to use that metric to our benefit. We've just got to make sure that we're on hand with ATV and sales conversion. And so that's where I wanted to include some of those broader themes around the emotional drivers and where spend is happening, across which categories are picking up. What are the emotional drivers that are bringing people into store? And then what is the purchase intent? Getting those outlet offers bang on track so that we can then support the brand message across all the other channels, and then knowing which other channels are going to be the key drivers of growth are going to be fantastic. That's certainly going to be one of the big mitigation risks this year, because ATV and sales conversions within our remit to help out, and we can certainly control that one a lot more. ATVs, at the moment, we're a little bit beholden to some of the wider economic challenges and some of the pressures that are putting prices up that, we certainly can't control as retailers and purchasers of stock from overseas markets. But we've got to manage how we bring these offers into play. We've got to manage where we place these offers, and we've got to manage the when and the why of who we're targeting and picking those up. Maximising that shop floor impact and directing teams to that first opportunity that matters most, that has got to be one of the key drivers. It's different. I think everyone in this room, if we were to put a poll up now and say, does retail feel differently now than it did to 2019 or even the tail end of 21, I'd be very surprised if anyone answered no to that question. Retail does feel very different. The numbers are different. And one of my old sayings, Luke Sullivan's in the room, he's heard me say this for the last 15 years, the scoreboard never lies. If the numbers are different, it's because it is different. It has changed, because numbers can't lie. They can try, but they don't. If we maximise all of those opportunities that are within our grasp this afternoon, tomorrow, the day after, and then if we align the company behaviours to making sure that we're supporting and enabling that transactive capacity, I actually think achievement of growth is possible. I'm not going to put that at 6, 7, 8%. If you hit 6% at the end of the year, I will celebrate with you. That is absolutely remarkable this year or any other year. But we can certainly hit a moderate level of growth this year and mitigate the risk that most people are forecasting for retail. That's me, Kylie.
Excellent. Thank you so much, Tony DeFazio. Very interesting stuff. I think, the thing we know now, supply chains have started to recover, and there's a bit of an ease there now for retailers with getting product into the country and having product available now in store. So we know that, there is inflation, interest rates are going up. So there's a little bit of nervousness, as you've talked about, about what does the future hold for 2023. The biggest thing that I took from this today is that the focus is really now on traffic's back in stores. If we're not quite delivering the sales conversion rates that we were previously, then why, and what are we doing about to improve our serviceability or ability to transact or engage in the stores, which is fantastic. One of the things that I'm starting to hear, which, for most retailers, hopefully they're already doing this, but the integration now of traffic data into rostering, how critical that is. So, previously looking at just what did we do last year in sales for that hour no longer is powerful enough to achieve the sales targets and the outcomes. So I'm certainly, from our perspective, because we're face-to-face, myself personally and the rest of our team, working with clients, there's a really big focus on pulling the traffic into the rostering systems, whether or not you're using Utivity, Kronos, etc. That's becoming very important. So looking at last year's sales is okay, but it's actually what is the current traffic trends that we're experiencing, and our rosters aligning to that. Tony, from your perspective, can you just talk just for a moment? I know you mentioned it earlier about the advanced CT, because I can already feel like, I know there's a few people in the audience that will already be thinking, how do I get that? Do I need to have zones? Because not everyone does. Can you just talk for a second just on the POS?
Absolutely.
The POS piece, and how could I have zones if I don't have virtual zones? How do I have zones using my POS data on the CET?
Absolutely. Great question, Kylie. Thank you. You can use your POS feed to mimic a zone. So let's say, for argument's sake, you are in the homeware space and you're a bedding and furniture retailer. So we might take your sales feed and look at bed sheets, and we create a zone that is bed sheets. And then we look at what is the trend for your ATV over the last 4 weeks for bed sheets, what's your sales conversion, what normally happens in this zone. And then if it trends off pattern, then we can just say, right, well, if you made that extra $5 in ATV across all of your bed sheets, you made 200 transactions, that's an extra $1,000. The next department might be pillows or pillowcases or furniture or anything. So we can use your POS feed to define that. So we're actually working with one retailer now who has 11 core departments across their store. They've got across those departments about 56, I think it was, 56 sub-departments. So what we did was we took their 4 key departments. We also took a couple of the key sub-departments from some of the other categories that were the lion's share of those categories, because they were pretty small. And then we grouped everything else into another. So you can have it at department level, sub-department level, SKU level, whatever it is that you choose. We can just use your sales feed, the sub-department, or whatever that product aggregation level, and we can substitute that in for your zone. So you don't need zones at all. We can set that up for you really, really quickly.
Yeah. I'm truly really excited about this launch, because I know for, being a retailer, you're live in the action throughout the day. You want to be able to influence the outcome throughout the day and not wait till the day is finished. And most businesses have core products and lines that they know if they're thriving and they're well replenished and they're signaged correctly and the team in store are promoting them, that they'll win the day and they'll get their sales target. So now it means the store managers, from what you're saying, is that they can take action on it throughout the day then, rather than wait till the end of the day.
Updates every hour, just like CET. So, and your store managers can just align their behavior, check it out, pick the top one. I've only got time to do one this hour, so I'll pick that one and I'll just focus on that. And if that just happens to get you well above target instead of just on target, well, then that's a happy day scenario in my book.
I just wanted to finish up with another question. I'm not too sure if there's any other questions that people wanted to share, but we know why CBD locations have regained this share of their traffic and why they're starting to thrive. We can assume that it's because people have gone back to the office now. They're back in the CBD locations. There's more confidence being back in those areas. So we can assume that that's the case. Why do you think, is there anything else why you think the outlets have started to perform more strongly now that we're out of the other side of the COVID period?
Look, if I was a cynic, I would say they couldn't have gotten much worse. But I'm not a cynic. Some people, I'm not a cynic. I think the reality is our clientele are now seeking the bargain. Our customers are seeking that bargain. As we're facing those pressures, I still need to replenish emotionally, right? Just because I may not be spending on footwear and clothing doesn't mean that clothing doesn't fill my soul with some kind of value, or a new pair of shoes doesn't fill my soul with some kind of value. So I need to seek that emotional value through finding a bargain. And if it just happens to be an end-of-line item, well, I'll take it, right? Because I feel good about it. I think that outlets have always had that niche. People have been, let's face facts, governments around the world were giving away money, literally. People were flush, and so they could choose to step up that little bit more. I think now we're facing a little bit of a different scenario on that basis. I think using outlets with clever offers will deliver, but I honestly just think it is that bargain shopper, or there's more bargain shoppers out there, and they're seeking that destination. And again, it's interesting, right? Because there's nowhere near as many outlets as there are metro centres in our KRI groupings physically out in the world. So to have that rise so prominent, so strong, tells you that it is consistent. It's not one centre or two centres driving it. It is everywhere. So if you have an outlet centre, if you have 5 outlet centres, more power to you.
Yeah. I think the only other thing that popped into my mind as you were talking as well today is that if we're talking about, utilising the serviceability and making sure that we're able to transact when the traffic's there in stores. So if we know that bringing the sales information and traffic together with rostering is really critical, the other thing that we're seeing is making sure that we bring all of the other data points, whether it's from online through to the stores, bringing it all into the same, portal or the same center, and having all of the departments looking at all of the data holistically together, really needing to shift away from the silos. The silo departments and not working in sync together seems to be quite critical as well.
Kepler's a great single source of truth. I know I did it back in the retail days. I had everything flow into my online, my NPS, my LMS scores, everything flowed into Kepler. And I think it's more critical than ever before.
Well, Tony, as always, it's a pleasure having you, and we love listening to the amazing insights that you provide us. And thanks again to everyone for joining us today. We really appreciate your time. And if you haven't already downloaded it, we've got the presentation that's been shared as well. Thank you again, everyone, and have a fantastic day.
Thanks, everyone.
See you later, everyone. Bye.